All righty. Well, first of all, happy Tuesday and happy post Labor Day. I hope no one actually worked on Labor Day. It's kind of a confusing holiday. It's Labor Day, but I hope you didn't work because that defeats the purpose. But I'm glad you're here now. And of course, my name is Luke Robinson, and I'm a business advisor here with Collective. And Collective, you can think of us as your all in one solution for your small business. We'll handle setting up your business, um, setting up your S corp, handling your payroll, your accounting and bookkeeping throughout the year, ongoing support, and tax filing at the end of the year. So think of us as just a factory for your taxes. But today we conduct a session we like to call Tax Tuesday. And essentially, it's just an AMA. It's an AMA session surrounding taxes, surrounding best business practices, best financial practices, questions about the tax code, just anything that you can think of. Now, it's important to know that this is just information. You know, don't consider this official tax advice. Don't consider this legal advice. This stuff can be very complicated. The tax code changes all the time. I can't see, your situation. And I could be wrong, with some of the information that I'm giving. It does happen. So before you act on any of this information, speak to a tax attorney, a CPA or some sort of tax professional before doing anything. But let's go ahead and get started. I bought a ton of stuff on Labor Day that I can use for my business. Can I write this off even though there were already a lot of savings? Well, only write it off if you bought it for your business. Don't necessarily write it off if it was a personal expense and you just kind of used it um, for the business. You're just kind of randomly. That's typically not an allowable expense. Usually, an allowable expense or a business write-off is something that is ordinary and necessary for your course of business. So usually that doesn't apply to a personal expense that you just kind of use for business. How can I use Labor Day sales as tax write-offs? Well, hey, I mean, if you buy things for your business using your business money on Labor Day because it's cheaper, those are still write-offs. Those are still business expenses. Now, again, they have to be for your business. These purchases have to be ordinary and necessary for your business for the IRS to say that you can write it off. But if that's the case, then it doesn't matter if you buy it on Labor Day or Easter. You can write those expenses off. Okay, I bought a new car for Labor Day under my business. How can I write this off? Well, there's a few ways that you can write off. Well, really, there's a couple ways that you can write off vehicles or just sort of transportation. And one is just the standard mileage rate. And the standard mileage rate is just simply driving how many business miles that you've driven, and you multiply it by a standard rate that the IRS gives. And I believe that rate is somewhere around 60 cents. I believe. Well, actually, I believe it's 67 cents. They usually update it and increase it, periodically. But essentially, so let's say that if you for your business you drove 10,000 miles for the business specifically, you take 10,000 and you multiply it by 67 cents. So what is that? That's $6,700 that you can write off as a transportation expense. That's the mileage. That's the standard mileage method. Another method is the actual expense method, which it's exactly what it implies. You can write off the actual expenses that your car incurs, not just a standard mileage rate. So, like for example, under actual expenses, you can depreciate your car, which is essentially just writing off just kind of standard wear and tear over time. That you can depreciate that. You can't depreciate it if you're using the standard mileage rate. You can write off actual gas purchases, oil changes, lease payments, car insurance premiums, all those things you can claim actual expenses for. And also keep in mind that with this actual expense method, unless you drive this vehicle 100% for business reasons, there's absolutely no personal endeavors in this vehicle. You can only deduct a portion of your expenses. So the amount that you can deduct depends on how many business miles you drive compared to personal miles. So let's say that in a year you drive a total of 30,000 miles, and 15,000 miles were business miles and 15,000 miles were personal miles. That means that you can write off 50% of your actual expenses. So you can write off 50% of your gas, 50% of your oil changes, and so on and so forth. Ooh, I've been making thousands of dollars on TikTok Shop every week, but I have to buy the products I'm reviewing. Can I write off these purchases? Ooh, if you are using these personally in any capacity, then technically no, you're not supposed to write those off. And I know that sounds a little strange, because in your mind, you're buying the products um, for my business. But what tax courts look at, what the IRS looks at, they don't necessarily look at at verbal justification. They look at facts and circumstance. So in your head, you could totally believe that you're buying it for the business and review it. But if you use it personally, that's all the IRS cares about, is how you actually use these products that you're buying. And if you're using them personally, the IRS would say that you can't write those off, unfortunately. Now, let's say, let's theoretically, you we're doing these TikTok reviews and whatnot, and you didn't use them at all in any sort of personal capacity, and you either resold them or did something like that, to other people in the business. Then those might be deductible, but even then, it's complicated. So it's usually a good idea to speak to a CPA or someone like that before you do it. How can the IRS prove we're using things personally? Well, they can't all the time. You know what I mean? And a lot of our tax code, a lot of our just tax process in general is voluntary. We live in a voluntary sort of, well, we live in a system to where the IRS just assumes that the information that you're presenting them is accurate. If they have reason to believe that it's not, they could audit you. They could, conduct investigations. They can come to your home or business and examine it. They can't necessarily come inside your home, but they can be outside your home with binoculars. They can come to your business, and they can, especially if you owe tax debt, they can ask to examine your assets. Like, they can do all those things. So it just kind of depends. Sometimes it's hard for them to prove things, but if they suspect something, they might investigate you a little bit harder. Why is an S corp? Great question, Kyle. Why is an S corp such a big deal when it comes to business formations? Well, at the end of the day, the reason why an S corp is such a big deal is because it could literally save you thousands of dollars. And how it works is, well, first of all, let's talk about S corps, just kind of what they are. A lot of people, when they hear the word S corp, they have kind of a misrepresentation about what it actually means or what it actually is. An S corp is a tax election. It's not a business entity by itself. Oddly enough, it's not a corporation. It's not an LLC. It's not a business entity. It's a way to ask the government to tax your business entity in a certain way. So before you even become an S corp, you have to set up something like an LLC, with your state of residence, a limited liability company. before you can even make an S corp election with the IRS. And you make the S corp election on your LLC, on your limited liability company. And what you do is and again, I wouldn't do this. Don't do this yourself. Have a professional do this for you. But how it is done is paperwork is sent into the IRS. It's called Form 2553. And you ask the government to tax your LLC under the S corp tax rules. Before that happens, like before you become an S corp, when you're just a sole proprietorship, or let's say that you've taken the LLC stage, let's say that you've set one up, doesn't matter. In either situations, you pay a lot in the self-employment tax. Self-employment tax, it's a flat tax rate of 15.3%. Before you become an S corp, a huge chunk or the entirety of your earnings are subject to the self-employment tax. The entirety of your net earnings. So let's say, for example, let's say that someone nets $150,000. Before you become an S corp, how you'd come up with your self-employment tax is you take 150 grand and you'd multiply it by 15.3%. All of your money is subject to it. What happens with an S corp election, though, is you become a W-2 employee of your own business. You literally become employed by your own LLC. And you're still the owner, of course. It's still your business. But for tax purposes, you literally become an employee as well. And since you're an employee, you'll pay yourself a wage. Excuse me. You'll pay yourself a salary. Your business will pay you a salary just like you'd receive. Oh, there we go. I think I lost it due to poor connection there for a second. But when you're an S corp, you will pay yourself a salary just like you'd make, if you work for someone else as a W-2 employee. But the cool thing about S corps, or the financially advantageous thing about S corps, is that the only chunk of your earnings that are subject to the self-employment tax is your salary amount. So, like I said earlier, let's say that someone's making $150,000, but let's assume that their salary with an S corp, let's assume that's $60,000, something like that. For whatever reason, $60,000 is a reasonable salary for this situation. That first $60,000, is still subject to the self-employment tax. You still pay it. The other $90,000, or just the rest of your money outside of your salary, then that money is no longer subject to the self-employment tax. It's called, that chunk of cash are called distributions. And it's still your money. Of course, you can still pay yourself these distributions whenever you want to. But long story short, that chunk of money is no longer subject to the self-employment tax. So in that scenario, just someone making that amount of money, an S corp could potentially save them. Let me do some quick math here. In that scenario, it saves them $13,770. So once you reach a certain income level, it can save you quite a bit of money, theoretically. Well, here's a really good question. I make space content on TikTok and have a sole proprietorship doing that. I recently signed up for a service that sends your DNA to the moon. This man or woman has sent his DNA or her DNA to the moon, ladies and gentlemen. And I'm going to be making content on this. Can I write off that service? No, probably not. Because if I had to guess, you're probably sending your DNA to the moon for personal reasons. You're saving your DNA because you're really impressed with yourself and you'd like to, have your DNA live on. So that's probably not now. And you could still, make content on this and make money off of it, but that itself is probably not a business expense. Good question, though. And good luck on, I hope your DNA makes it to the moon. I really do. Are there any important dates coming up for Collective? Well, that's a really good question. I would say there's important dates in your situation. And I put it this way: you cannot become an S corp before you set up an LLC. No. A sole proprietorship can't become an S corp. You have to have that business structure in place before you can even file the paperwork to the IRS to make the S corp election. That has to exist first. The longer you wait to set this up, like if currently you're just a sole proprietorship, as time goes on, the more money you'll needlessly pay in the self-employment tax because you're not an S corp. The self-employment tax you're currently paying right now, if you're a sole proprietorship, is heightened, it is increased because you don't have that S corp election. So an important date is to at least have a conversation with us. Go to our website, go through our tax calculator, see how much you could potentially save with an S corp, and feel free to schedule a conversation with us. And we'll determine, if you need to be an S corp, kind of when that needs to happen. And for a lot of people, that needs to happen as soon as possible. Because again, the longer you wait, the more money you're throwing away needlessly to the self-employment tax. So that important date is today or tomorrow, because you need to determine what you need to do business-wise and tax-wise. What exactly do you have to pay when you become an S corp? Well, first of all, like I said, you have to set up an LLC before you even make an S corp election. So usually there are, well, not usually, always, typically, there are costs with setting up an LLC. And it's a registration fee that the state charges. So the state of California, for example, charges $70 to set up an LLC. The state of New York charges around $200 to set up an LLC, so on and so forth. So really, to become an S corp, the only thing that you really have to pay is that LLC registration fee. And then you also, with that, typically have annual sort of either annual or biannual renewal fees for that LLC. So usually the costs becoming an S corp aren't with an S corp, it's with the LLC that you got to start. Do S corps need an LLC? Yes. So in order to be an S corp, you have to be an LLC first, or you have to be a corporation first. You have to have some sort of business structure or business entity in existence with an EIN number before you can elect the S corp tax status. So you have to set it up first. There is no one without the other. You can't become an S corp by itself. It's not possible. Now, there are ongoing costs for an S corp. And one is you have to start running payroll, because you will be on a paycheck with this new tax structure. So you need some sort of payroll system. You need to be on payroll. And that could, usually be like, around $60 a month, somewhere like that. Then you have to have, you usually need to have some sort of, mid-level accounting software that, can handle the S corp specific accounting and whatnot. And then you have to file your business tax return at the end of the year. So that could also be another cost. I have an S corp without an LLC. Well, then you have a corporation with an S corp election. It's not possible to be an S corp by itself. You either have to be an LLC and make an S corp election, or you have to be a corporation and make an S corp election. It is not physically possible to be an S corp by itself. There is no such thing as an S corp by itself. An S corp is only paperwork you file on a business entity. And those two entities are either LLCs, partnerships, which is just another way of saying multi-member LLCs, and then corporations. Those things can make an S corp election. Oh, good question. Do you have plans to allow for more than 5 subcontractors per year? There are there's some rumblings about that. Yes, there are. Now, I can't tell you exactly when that's going to happen, but there's some rumblings about that. Corporations as an S corp, yes, you can have a corporation with an S corp election, but you have to set up a business entity first before you make an S corp election, either an LLC or a corporation. I just got a message from TurboTax about the extension date approaching. Is it too late to use Collective or H&R Block for my taxes? Well, it's for one, the extension date that's approaching is your personal return extension date. So Collective only files your S corp tax return. Like think of us as kind of an all-in-one solution specifically for your S corp. So you wouldn't be able to file your personal return with us, but H&R Block might be able to do it in time. I'm not really sure. Just because I'm not sure their process, but they could probably still do it in time. With all the tax services out there, what sets Collective apart? I would say our convenience. Definitely. At the end of the day, we are a platform. Think of us as an all-in-one platform for self-employed business owners. Now, when you're with a CPA or just, kind of, a random bookkeeper or someone like that, typically it's not a platform. Things aren't as convenient. It's very hard to get a hold of someone, kind of face to face. You don't have, I guess an online product where all of your services and softwares and everything, it lives in one spot. Before Collective, you typically have to go to a CPA and communicate via email once every 3 weeks maybe, and wait months to get on the phone. But with Collective, think of us as a platform that just sort of provides everything that you need to run your S corp in a tax context, an accounting context, ongoing support. And what sets us apart, I think, is that all of those services are roped into one spot. You don't need different companies. You don't need different professionals. We're an all-in-one platform. All right. I just got out of my last quarterly as a sole proprietorship. Year to date, I will have paid $22,000 in self-employment tax. I'm excited to be making the switch to Collective. Well, we are very glad to hear that, and we're excited to have you as a member. And absolutely, I mean, the self-employment tax can be a real killer. I mean, financially speaking, and it's unfortunate because when you're self-employed, when you're running a business, you got your plate full. You're wearing all hats. You're doing the darn thing. And unfortunately, with all that also comes along with higher taxes. And it's unfortunate. In my opinion, it's not really fair, but that's where the S corp comes in. The S corp can really help lower the self-employment tax, help you keep more of your money, because that's the point, right? We're here to make money. You mentioned earlier that a partnership can become an S corp. What do you mean by that? Well, a partnership, really all that is when two or more people are on an LLC. That's what a partnership is. And I mean, there's no, it's not really, more complicated than that. That is what a partnership is. And essentially what you do is you form a partnership, which means you file the articles of organization with your state. And on those articles of organization, they will have several members, either 2 or more members. And that is a partnership. The IRS automatically considers that a partnership. And then you'd probably need some sort of partnership agreement, behind that partnership that kind of outlines, who's responsible for what, who, gets paid a certain salary, all that jazz. And then you send in paperwork to the IRS to make an S corp election, on that partnership. Okay, I think I have time for one more question here before I have to hop off. Can a nonprofit make an S corp election? Um, no, no, it can't. I mean, and really, the only reason you usually would want to make an S corp election if you are making a profit, and that profit is subject to the self employment tax, because that's really the main reason for an S corp, is to reduce the amount of the self employment tax. So usually with a nonprofit, like that kind of stuff just doesn't really come into play. And I lied. I think I have time for one more question. What's the minimum profit that I need to have before I become an S corp? Well, here at Collective, we say, or we give a general recommendation of around $60,000 net income. You know, as long as you're making $60,000 net income, you can reasonably expect. Now, this isn't always the case, of course, but you can reasonably expect to save more money with the S corp than what you would pay Collective overall in total. So it's just kind of a good rule of thumb to say, okay, if I'm at least making $60,000 in my business, I can reasonably expect for my S corp to save me more than my Collective membership. And that is all the time that I have today. I have a busy day of speaking to prospective Collective members and other things, but I enjoyed it so much. You guys asked amazing questions like you do every week, and like I said, if you think that an S corp might make sense for your business, if you're interested in Collective services, schedule a call with us. Send us a message on social media. Go to our website. Feel free to try out our tax savings calculator. And lastly, feel free to get a call scheduled, and you can speak to an advisor to give you some next best steps on your business.